Hey, so if you're a beginner or you're new to the markets or just learning your way through this crazy journey, close this video. I'll talk to you later. Okay, now if you're still here, we need to talk. In the early phase, or the one you feel like you just kind of left behind, you learn the mechanics, how to lose money, you're emotionally reactive, unsure if you belong. Well, in my opinion, that is not the hardest part. Yes, it's hard, of course, very hard, I get it. But what comes next to me is the most dangerous phase of all, the most challenging years. And it's the stretch that nobody really prepares you for. I would say years roughly 3 to 6. And if that's you, if that's where you're at right now, this video is not about hyping you up or motivating you. You already have all that. It's about helping you understand why is it that this phase is so destabilizing, you know? What happens under the hood? How do you push through it without blowing up or walking away right before everything finally comes together? This period actually usually starts with a shift in identity. You know, you had the wins, you've proven that you can make the money. Maybe you're consistently break even or even you're profitable. And you've had a year or two where maybe things actually worked out. Maybe they went right. That success, which, by the way, well done, it does create a sort of expectation. Because internally and externally, you're now like past the hard part, right? But the game changes. It's not the charts, but it's more within inside you. So let's go talk more about that. All right, so we're gonna jump right into it. One of the first major pressure points is the idea of income dependency. After all, many of you might actually decide to go full-time after this. You might leave that full or part-time job and reduce that safety net. And you're mentally locking yourself into trading being the only path forward. I mean, why not, right? You're a winner now. But what you might not fully appreciate yet is how different trading can feel once it becomes your sole source of income. There's no paycheck buffer. There's no clocking out, and there's no structure forcing some restraints. So even with your solid process and the strategy that you have, that pressure that's attached to each and every decision becomes a little bit heavier. And you'll start noticing that in a little bit of more subtle ways. You might force a trade or two that you might not necessarily have taken before. You might start exiting early just to lock in some gains. Or maybe you press it a little bit when you feel like you're not progressing or making moves forward. Well, the solution for this it's not actually like grit or pushing harder. You need to actively be reducing the pressure in any place that you can. Maybe it's smaller sizing, or maybe it's shorter time horizons when the strategy allows for it. Giving yourself more optionality. That way your nervous system can start to relax into this new reality. And if you go ahead and try to like man up or outwork this new pressure, that's when it usually can backfire on you. You tend to perform the best when your trading results are not expected to carry the entire load of your sense of security. Now, the next fun hurdle is scaling. And this one catches a lot of people off guard. Size will amplify everything involved in your trading. Sure, you made money with your small size and you learned how to read markets, but sizing up, what it really does is teaches you more about needing to manage yourself. That fear that you feel during trades, that's going to get a lot louder. And the greed with the bigger numbers gets pretty addictive. And hesitation that you might not have had will start to peek its head in places that you never thought about. Trades that used to feel simple and clear now have a different, heavier feel to them. They're more vital and they could be harder to manage. That strategy you had that was just churning away no problem, it now feels different. It's emotionally disruptive in a way that it wasn't before. And you might interpret this as something being wrong with your strategy or your edge. But in reality, what's happened is that your risk container just hasn't expanded yet. So the fix here, it's not brute forcing that. It's actually, and I know it sucks to hear, gradual exposure. It's boring almost. It's not a heroic dose. Your psyche can only adapt at this very like incremental rate. And as you move up, you're going to get these spikes in emotion that you're going to have to work through and you've never felt before. But if you do it slowly, at least there's no risk, most likely, of you losing your seat in the game. Because like usual, if you just keep lasting, keep surviving, you will likely be successful. And now, what about this one? This is going to be one I feel like a lot of you haven't really thought about. And that is just regime change over time. It could be cyclical or secular shifts in how markets operate. The volatility will shift, the ranges will expand or contract, and the volume can go higher or lower in every single market. And in this space, during these changes, it is where a lot of traders' confidence can erode over time. Because most of you, pay attention, have learned in a very specific environment in a shorter window of time where everything seemed to work. A certain volatility regime, a particular set of narratives, policies, and flows. And it's a market structure that started to reward you. But hey, bro, markets, they're dynamic. They don't stay there. And when that happens, by the way, it will, what once was working cleanly will start breaking down. All good trades, they come to an end. So you'll start to wonder, oh, has my edge disappeared? Or am I just misaligned with this current environment? And this is a very dangerous place because it's going to tempt an overreaction the other way. You might strategy hop completely, or you'll start chasing some new narratives to feel like you're catching up. You'll start to rebuild your entire foundation unnecessarily. The solution here is going to be more of an adaptation and refinement rather than an abandonment of everything you already know. You're not going to need a new identity every time that conditions change. You need a small, sharp toolkit that you very deeply understand, and then the patience to let it reassert itself in a new environment. Now, let's talk IRL, in real life, the thing that a lot of people actually don't seem to mention or think about. What if you get a new partner, a marriage? Maybe you have some kids. What if your cost of living goes up dramatically? That might to allow for less flexibility day to day, and your margin of error starts to shrink. And that could happen right alongside your tolerance for an inevitable drawdown. So your trades and your results are going to keep adding even more emotional weight than you didn't have before. Every decision is going to feel more consequential than ever, even when, statistically speaking, they're not any more or less significant. So this is where you might start confusing stress with urgency. So you should not trade harder and faster. You should start designing your life in a way that starts to support your decision making. Maybe that looks like smaller goals. Just lower those monthly and quarterly targets that are running around your head endlessly. Start to shift, if possible, from an outcome to a long process-oriented mindset. Remember, it's about longevity here. That'll beat immediacy and outcome-based trading. And now, to go along with all of that financial pressure, let's chat about what it'll feel like to keep up with the Joneses, the comparison game. See, because when you're new, there's just not really much of an expectation from yourself or other people around you. You're struggling, they're struggling, he's struggling, whatever. You're all new, right? Doesn't matter. But, get into years 3 to 6, well, that's different. You're supposed to win now. You're supposed to get it and win with pure class. People expect things from you, and you personally, you expect results. And guess what? You're going to start noticing when other people are really crushing it. When you are going to sit there at times and you're just going to be taking L after L and wondering what on earth is going on. Comparison at this stage is not motivating. It can be incredibly destabilizing. It'll start to push you right into those trades that are not you, that are not in your wheelhouse. Sizing and risk that you're just not ready for. And styles and stories and time horizons that you don't understand. So the real work to be done here is ego shedding, not building. You need to stop validating your identity through the outcomes and instead fully recommit to your process, even if it looks slower and less exciting than what other people are doing. And some of you are going to learn this cheaply, and others are going to pay for it repeatedly. Oh, and the last of you, the others, you'll just fail entirely and you will be gone. One last thing, let's not ignore the dry spells that'll come. Not days, not weeks, but it could be months where nothing seems to click. And you're going to question everything you've done up to this point. Why did I even go for this? I left everything behind. Well, the goal here is to switch to a preservation mindset. You need to survive this stretch without trying to force things to happen. Small enough size to execute and think clearly through time. This is all about the preservation of capital, both the financial and the psychological. That way, when things inevitably do improve, you're still functioning. See, winners, they're not defined necessarily by their consistent performance. Rather, it's how little damage they do to themselves when things do not go well. So, years 3 to 6, it's not about so much learning to trade anymore. It's all about learning to operate under sustained, heavy pressure. How to scale without rushing, adapting without a sense of panic, handling that more responsibility without forcing the outcomes, and staying aligned when nothing is rewarding you in the moment. It is not speed anymore. It's about durability, endurance, the long game. Because, of course, when opportunity does come knocking, and it will, the ones who actually survived this phase are going to be the ones positioned to really take advantage. Not because they're better, not because they avoided the struggles, but because they survived and they were there just long enough to deserve that next breakout in performance. So you are being forged, and how you decide to handle this specific stretch of time will determine if trading is something you leave in the rearview mirror or something you build your entire life around. So thanks for watching. I hope this resonates with some of you. Please hit that like and subscribe button. If you want to talk more about this stuff, we do have the free Risk Cabin Discord. We got over 1,400 people in there at the moment. Come talk equities, crypto, futures, mindset, psychology, everything under the sun. Would love to have you. The link is in the description below. And remember, this is not financial advice. It's just for entertainment purposes only. I'll see you guys in that next video.